Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello, I'm Professor Code and this is the Forex Super Model weekly review for Monday the 4th of October to Friday the 8th of October 2021. We've written up the weekly flows to get us underway. We're going to start this video as we write things up, save time. Anyway, let's get underway then. So the last trading week then, the 4th to the 8th, euro dollar minus 29. So that means over that period the euro dollar as an FX pair lost 29 points or pips, euro yen plus 128, euro pound minus 59, pound dollar plus 55, pound yen plus 243, and the dollar yen plus 135. If you plug that into the formula, you get a negative unopposed driver in the yen at minus 506, no backdoor flows, the opposing positive flows mainly going into the pound at plus 357, into the dollar at plus 109, and the euro is the positive rock at plus 40, activity plus or minus 506. Now, so over the week then, that period, 4th to the 8th, the yen has been negatively driving to the exclusion of all else. So basically the yen has been weak, and it's been the opposing positive flows have predominantly been going into the pound and a little bit into the dollar, and the euro is pretty static. So that's where we are. We're going to stop that there and write up the asset classes. Right, we're back. We've written up the asset classes then. So US dollar index basically was on a pump up. It came off. It's now back at 0.19 from the high. So it's 20% off the modelled high. Strong dollar basically. Gold shouldn't like strong dollar, and it's 0.36 from the floor, so about a third off the model floor, so it's below half marks. Oil doing very well at the moment. It's broken the resistance, it came back a little bit, and it's now back up to the new resistance, plus 0.25 from the high on the break, so it's 25% above the resistance. Right, Wall Street, S&P and Tech, they've all got the same look. They went up, they had a pump down, and now they're recovering. Wall Street's 0.38 from the high, so above half marks. S&P's 0.45 from the floor, below half marks, and the Tech is 0.33 from the floor, below half marks. So the Tech's the weakest, then the S&P, and the Wall Street is the strongest in model terms. Right, US 10-year in the bund. So this is the price. We've got this break downwards in the price of the US 10-year. Suggesting rising yields in the US, and the bund is also strong in terms of yields. The price is on the floor, but not quite. It hasn't broken the support. So arguably US yields are outstripping euro yields at the moment in the short term. So that has a bearing on the asset classes as well. So. Then we've got copper. It's been chopping around. It's 0.40 from the high, so it's 40% off the modelled high. It's above half marks. It's really been horribly range bound for a long time now. And US steel's on the deck basically. It's tried to come off a couple of times, but it's right on the floor in terms of price. So we'll get rid of that, and then we'll write up the data cycle and then do the analysis. Right, we've written up the data cycle. So look, China is mixed. Then tier 1 is soft, tier 2 is mildly positive. The dollar is mixed. Tier 1 is mildly positive, but tier 2 is very strong. And Germany is soft. Euro zone 27 countries is mixed. Tier 1 mildly positive, tier 2 heavily negative. The yen and the pound are neutral. CAD is mixed. Tier 1 is neutral, but tier 2 is very strong. The AUD is mixed. Tier 1 is strong. Tier 2 is weak. The NZD is mixed. Tier 1 is reasonably strong, and tier 2 is very, very soft. and the Swiss is neutral to soft. So what have we got then? We've got, in terms of we've got dollar tier 2 strength, euro tier 2 weakness, CAD tier 2 strength, and New Zealand tier 2 weakness. So if you look at what's going to knock this about next week, well, the key feature really is going to be the Fed minutes on Wednesday the 13th. So that's sort of late afternoon, early evening for us in the UK. So the market's going to be positioning Monday and Tuesday and Wednesday morning really for the Fed minutes. We had an ADP report on Wednesday which came in fairly positive, and then we had this soft NFP, and we also had linked to that very strong CAD employment data as well. So you had this double effect on the dollar and the CAD. And if you look at the CAD, you've got this very strong tier 2, and the dollar tier 2 is very strong, but as I said, the tier 1, which non-farm payrolls is a tier 1 event, is quite mildly positive. So you've got that sort of twist there in what's going on. So if we look at what's going to be going on or has been going on January, if you look at the majors, so dollar, euro, yen and pound, and if you look at the flows, so if you look at the actual flows on Friday, the yen was once again negatively driving to the exclusion of all else. So you had yen weakness driving positive flows into the euro predominantly. Now over the week the euro has only managed to come up to the positive rock, but as we said on Friday in the early morning briefing, we expected the flows to find a home in the euro, and we suggested the euro complex as a whole would strengthen up. It didn't. The whole complex didn't strengthen up in total because of the weakness of the commodity currencies, the strength of the commodity currencies, the CAD, off the back of this double data really. You had the employment effect and oil charging up as well, and then you had a relatively strong pound as well, which was being propped up by basically this falling yen, and the equity market. Normally when you get a very soft yen, you get a roaring equity risk on market, and we got a bit of that, but we didn't get it totally. So there's something to bear in mind. You've got this disconnect between quite a soft yen complex and equities which haven't really shown that transmission. So the dollar then, we've got this Fed minutes on Wednesday the 13th of the 10th, so that's going to be critical. we've got this yen weakness. The yen is negative, and the pound is by default a little bit positive, or quite a bit positive, and then the euro has got this sort of hockey stick look to it. It's starting to think about bouncing now. And then we've got the CAD, the AUD, and the NZD, and the Swiss, just to finish this off. Right, so the CAD is getting two kicks up the pants at the moment. It's getting the oil break, oil around sort of $80, just around that mark, and also strong data. So you've got CAD strong data there. So the CAD is getting a boost. The AUD has got sort of mixed reviews, and the NZD is struggling in terms of tier 2 data. So that's that. And the Swiss is likely to be soft off the back of this sort of yen's softness as well. But obviously against the yen, the Swiss will be strong. But generally, the Swiss is likely to be reasonably soft generally. So going forward, then, the key factors is going to be how the equity market reacts as we go into Monday and Tuesday. Now, because obviously the Fed minutes, and it's all sort of all the background of this is the inflation effects. Is inflation transitory? Is it temporary? You've got imported inflation via the oil market now, so you've got gas market raging as well. So you've got commodity prices, energy commodity prices charging up, but you haven't got actual real commodities charging up at the moment. So copper is finding hard work to get up there, and US steel is on the deck. And that may well be off the back of energy prices as well. So as well as this, they've just agreed to raise the debt ceiling in the US. So that's another factor. So what do we think then? So going into next week then, the equity market, as I say, you've got this strong equity transmission normally between the yen and the price of equities, an inverse relationship. We've got the yen very vulnerable at the moment to a pump up, and yet equities are sort of at mid-range and struggling depending what index you're looking at. Tesla was sold off on Friday. So really what we need to do is we need to look at the Asian flows on the Monday to see how the market is positioning itself early on, and then we need to be aware that the yen has got plenty of manoeuvring room for a bounce, which will tend to be associated with a risk off, falling equities, etc. The oil is very high, and if we get a continuation of that, that will not be happy for equities either. We've got the dollar. The dollar's come off a bit, but it's still relatively strong, and the market in risk assets won't really like a strong dollar as such. And you've got this euro, which has been battered down off the back of a strong dollar, and is now showing signs of hockey sticking on the up. So that's where we are. So we'll know a lot more early Monday morning as we see what the Asian session's been doing. So, but that's the overall macroeconomic picture. So I hope that was useful. Thanks for watching. See you Monday morning for the daily briefing. Goodbye.